It happened again, and if you're looking at the price of silver and wondering what just broke, the answer is simple: nothing did. No new flood of supply hit the market overnight. Solar factories didn't shut down. EV demand didn't vanish while everyone was asleep. Yet silver dropped hard, fast, and without mercy. That's not a mystery move. That's a mechanical one. While most people were offline, while liquidity was thin and attention was low, the rules of the game changed. A margin hike hit the futures market, and the moment markets opened, it triggered forced liquidation. Not selling driven by fear or opinion, but selling driven by math. Accounts were suddenly underfunded, collateral requirements jumped instantly, and traders who, along with leverage, had only two options: post more cash immediately or be sold out at whatever price the market was offering in that moment. That's how you get a cliff instead of a pullback. That's why the move felt violent, unfair, and disconnected from reality, because it was. Silver didn't fall on news. It fell because leverage was squeezed. So in this breakdown, we are going to strip away the noise and focus on the real trigger. I'm going to walk you through exactly how a CME margin hike works, why it hits silver harder than most markets, and why these drops keep repeating even when the physical market stays firm underneath. You will see how paper silver can collapse in minutes while real metal doesn't suddenly become less valuable, and why understanding market structure matters more than guessing headlines. This isn't about predicting the next tick or selling panic. It's about understanding the machinery behind the move, so the next time it happens, you're not confused, you're prepared. If you want clean, grounded explanations when these waves hit, stay with me, because once you understand this mechanism, silver price action starts making a lot more sense. The first thing you have to understand is that silver futures are not a simple bet on metal going up or down. They are a leverage instrument. One contract controls thousands of ounces, but you don't pay for those ounces upfront. You post margin, which is essentially a security deposit that proves you can survive normal price swings. When volatility rises, the exchange reassesses risk. If it decides the market is moving too fast, it raises margin requirements. That change happens instantly, not gradually. The moment it hits, every leveraged long position is revalued. If your account no longer meets the new requirement, you're in violation. Your broker doesn't ask for opinions or give you time to wait for a bounce. You either post more cash immediately or your position is liquidated. Multiply that by thousands of traders, and selling becomes automatic. No analysis. No conviction. Just forced exits. That's why these drops don't look natural. There's no negotiation between buyers and sellers. It's a one-way flow caused by rules, not sentiment. This is where silver's personality really shows. Silver has always been one of the most volatile major commodities because it sits at the intersection of investment demand, industrial use, and heavy leverage. When margin hikes hit, they don't impact everyone equally. Large institutions can move collateral quickly. They have liquidity, credit lines, and treasury teams. Smaller traders don't. Retail traders don't. During thin liquidity periods, like holidays or year-end stretches, that imbalance gets amplified. When forced selling begins, it pushes price down. That drop triggers stop losses. Those stops add more selling. Lower prices then create more margin stress, which forces even more liquidation. This feedback loop is why silver often drops in straight lines instead of waves. It's not because the metal suddenly became worthless. It's because paper silver can be dumped far faster than physical silver can be produced, shipped, or absorbed. In minutes, enormous volumes of paper ounces can trade hands, creating price moves that look extreme but are structurally driven. Now here's the part most people miss. While the paper price is collapsing, the physical market often barely reacts. Premiums don't crash. Inventories don't suddenly overflow. Dealers don't panic. That disconnect tells you something important. Futures markets set price, but they don't always reflect real-world supply and demand in the short term. They reflect leverage pressure. This is why you can see silver futures down sharply while physical buyers quietly step in underneath. The paper market is cleaning out weak hands, not rewriting fundamentals. Understanding this difference matters because it changes how you interpret these moves. A margin-driven sell-off is not the same as a demand-driven collapse. One is temporary and mechanical. The other is structural. If you treat both the same, you'll make emotional decisions at the worst possible time. Silver has a long history of these events, and the pattern keeps repeating because the structure hasn't changed. So the real lesson here isn't about predicting the next margin hike or calling the exact bottom. It's about understanding what kind of move you're watching. When silver falls on forced liquidation, panic is usually loud, fast, and wrong. These events are designed to reduce risk in the system, not to signal the end of the story. Once the forced sellers are gone, price often stabilizes quickly because the pressure was never organic to begin with. Going forward, the signals that matter aren't headlines or hype. They're margin changes, liquidity conditions, positioning, and the behavior of the physical market beneath the paper price. If you understand the machinery, you stop reacting emotionally and start seeing these moves for what they are, leverage being flushed. And when you can see that clearly, silver stops looking chaotic and starts looking predictable.
Hello friend, welcome to my YouTube channel. I hope all if you are doing great and having an amazing day. My name is Noor Baqi and I am really excited to start this new journey with all if you. You know, this channel is not just about videos, it is about story and ideas and inspiration. I created this channel to sharing something positive every signal week. Sometimes we all need little motivation, and sometimes we just need a good story to smile again. Decide exactly what this channel is all about. You find understanding stories, real life experience, and powerful lessons that again change the way you think. I be uploading new videos regularly, so if you don't want to miss any of them, make sure to subscribe to my YouTube channel and press this bell icon so you get notification whenever you post something new. Your support means everything to me, and to great we can build a community full of fraternity, learning, and good vibes. So sit back, relax, and let us begin this amazing journey together. Thank you so much for watching and welcome once again.